Good afternoon, everyone. My name is Haley Campbell. I'm the manager of community engagement with Florida Financial. Thank you so much for coming on here and joining me today. It's actually National Homeownership Month, so I'm super excited to be doing this webinar today. The topic is going to be taking pride in homeownership. This is going to be an informative webinar, so I will be providing my contact information both at the beginning and end of the webinar. So if you have any questions or feedback following the webinar, you can reach out to me. So it's about 2:01 now, so I'm going to get started. Okay, so my contact information is here on the screen. My email is hcampbell@wefloridafinancial.com, and my work cell phone number is 954-871-7525. And like I said, if you have any questions, feedback, I'm here to help at any time, so you can call, text, or email me. So today's webinar agenda is going to cover the following topics. Welcome to your credit union. Are you ready to buy a home? 10 steps to buying a home. Loans. Getting pre-approved for a mortgage. Finding a real estate agent. Making an offer and getting a mortgage. Last steps before closing. Closing and saving. We care about your financial literacy, and how to join we. So welcome to your credit union. To give you a little background on Florida Financial, we're a full service credit union that has been providing outstanding customer service since 1952. So this is actually our 71st year of being open, which is pretty awesome. We're not for profit, so every member is a shareholder of Florida Financial. When you deposit money into your credit union account, you become both a customer and an owner. We offer low fees and high savings rates. We also offer a range of loans, including auto, home, personal, aviation, and more, which have low interest rates as well. So are you ready to buy a home? Before deciding to buy a home, it's beneficial to weigh your pros and cons on renting versus buying. So renting offers flexibility, predictable monthly expenses, and someone to handle repairs. Home ownership also has benefits such as giving you a sense of stability and pride of ownership, along with tax deductions and equity. If you decide home ownership is the route you want to pursue, it's important to determine your readiness. As a first-time home buyer, the process can seem scary and intimidating, so it's important to have everything in order before taking the big step. Careful planning and preparation can help make the process run smoothly for you. In doing so, take some time to answer the following questions. So I have them on the screen. This is kind of what you want to ask yourself to make sure you're ready before starting the process. Why do you want to become a homeowner? How long have you been considering buying a house? Do you have a stable source of income? How long do you plan on living in the area? Have you looked at home prices in the area? How much have you set aside for a down payment? Are you prepared to take on home repairs and maintenance? Are you familiar with the finance options that are available to you? Do you know how much closing costs might be? How will you furnish and decorate the home? What are the neighborhoods and schools like where you want to live? How old are the roof and appliances of the houses you're interested in? How many days has the house you're interested in been in the market? So if you answer these questions and feel ready to buy a home, you feel confident with that, we can move on to how to get the process started. Ten steps to buying a home. So buying a home can be a lengthy process, but I'm going to try to break it down into 10 main steps. There's obviously, little things that come in between these, but this is like the main things. First, check your credit score, determine how much you can afford, choose a lender and get pre-approved for a mortgage, then find a real estate agent, start the home search process. Then once you find something that you really like and you want to be your home, you put in an offer. Then you get a home inspection and home appraisal. Step 8, you'd purchase homeowners insurance. Then you would do a final walkthrough. And then the last step, step 10, you would close on your new home. It's also helpful to make a wish list to help you figure out what you want or need in a home, such as what your must-haves are versus what you're willing to negotiate on. So on the right of the screen, I've included a sample wish list on this slide for reference. So do you want it to have a pool? Do you want it to have wheelchair access? Do you want high ceilings, a backyard, balcony, nearby schools? So it's ideal to just have this wish list of must-haves, or what's a must-have and what's a nice to have, so that when you're looking, you're not selling yourself short and you know what you want and are looking for. So next topic is loans. A loan is when money is given to another party in exchange for repayment of the loan principal amount plus interest. WeFlorida Financial offers a range of loans with low interest rates such as home, mortgage, HELOC, and more. To find the right mortgage for you, the type of mortgage you use to buy a house affects what you'll need to qualify for the loan, including the required down payment amount and how you'll pay it back. Choosing the right home loan can boost your chances of approval and may save you thousands in the long run. Before you decide which type of mortgage to pursue, it's important to learn the pros and cons of each one. So I just want to discuss some of the main types of mortgages. So there's conventional loans, which are mortgages that are not guaranteed by the federal government. They offer low minimum down payments, but have more stringent qualifications. There's also FHA loans, which are mortgages backed by the Federal Housing Administration, also known as the FHA. These are generally easier to qualify for than conventional loans, but have stricter requirements for mortgage insurance. There's VA loans. So from the Department of Veteran Affairs, they offer VA loans for active or former service members and eligible spouses. VA purchase loans allow you to make no down payment. So that's good for veterans. There are jumbo loans, which are mortgages for houses that are more expensive than standard lending limits. These usually require larger down payments and higher credit scores. There's also renovation loans, which let you wrap the cost of home improvements into the total amount of the home loan. Especially when mortgage rates are low, this can be a way to borrow more money for repairs while paying less interest than you would with another type of home improvement loan, like a personal loan. With each of these loans, you may have the opportunity to choose between a fixed rate or an adjustable rate mortgage, also called an ARM. As you probably guessed from the names, fixed rates are static and adjustable rates can move up and down. You'll also need to choose the mortgage term. 30-year mortgages are the most common, but there's also 10, 15, or 20-year terms that can be an option as well. Some tips regarding loans would be to gather knowledge on lenders and always take a loan from a credible financial institution. Be sure to check your credit reports. Your credit score and credit history are major determinants in the interest rate you receive on a loan. Always make sure your loan payment is on time and try and pay more than your minimum. Also, paying off your mortgage early is a good way to free up monthly cash flow and pay less in interest. So getting pre-approved for a mortgage. A mortgage lender is a financial institution or organization that loans out money for real estate purchases. A mortgage pre-approval is an offer by a lender to loan you a certain amount under specific terms. This offer expires after a certain time period, which is typically about 90 days, but it can differ. So if you've come to the point where you know your home buying budget and you've decided what type of loan will work for you, then it'd be time to start shopping for a mortgage lender. When you're looking at lenders, determining that they offer the type of loan you want is the first step. You'll also want to look at how their sample rates compare with today's mortgage rates, find out what closing costs you'll be responsible for, and compare mortgage organization fees. You can typically find some of this information right on the lender websites, but to get some actual numbers, you'll most likely have to speak with a loan officer. Working with a lender to get pre-approved for a mortgage is an important step in accurately determining your budget. A mortgage pre-approval will give you real numbers since the lender will have detailed information about your finances. That includes a hard inquiry, which will show up on your credit report. But the good news is if you apply with multiple lenders around the same time, it'll only count as one hard pull on your report. Pulling together all the documents for a pre-approval can be time-consuming, but it is worth it. Along with the pre-approval letter stating how much the lender is willing to lend you, you can also get a loan estimate form. This form isn't final, but it lets you compare lenders' rates, fees, and other costs since they all use the same form. A pre-approval letter is typically valid for only 60 to 90 days. A pre-approval letter also shows sellers and real estate agents that you're a serious buyer who can get financing, which can give you an advantage over competing people who are also home shopping. Florida Financial has low interest rates on our mortgage loans. So if you're interested in applying for a mortgage loan, you can call 954-754-2400. You can also text that number as well to get in touch with us. Sorry, that skipped backwards for a second. Okay, so finding a real estate agent. A real estate agent is a licensed professional who represents buyers or sellers in real estate transactions. If you have your pre-approval in hand and know what kind of house you're looking for, now's the time to find someone to help you look for homes. The right real estate agent can make a huge difference throughout the process of buying a house, from knowing the ins and outs of the local market to providing support to helping you negotiate with the seller. It's a good idea to interview at least 3 agents. Ask people you know who've recently bought a home whether they'd recommend their agent. You want an agent who will advocate and negotiate on your behalf. The buyer's agent is generally paid a commission by the seller, so while you'll sign a representation agreement with the real estate agent, you won't be responsible for actually paying them directly. Making an offer and getting a mortgage. Once you find a home that you want, it's time to make an offer. Your real estate agent can be a huge resource here, providing you with sales information and intel. Once you make the offer, the seller reviews it and they may accept, counter, or decline it. If it's accepted, you'll apply for a mortgage and begin the closing process. If the seller rejects your offer, you might make a counter offer or walk away. It depends on why they turned you down. If the seller counters, you can talk it out with your real estate agent to decide whether to accept or make your own counter offer. If the seller accepts your offer, then congrats. You would only have a few more steps to go. You'll also likely write your first check at this point. Earnest money is a deposit you'll make toward the purchase of the house. It usually goes into an escrow account, and when the sale goes through, most buyers use it as a part of their cash to close. Also, now that you know the property you want to buy and how much you'll have to pay for it, you'll need to choose a lender to get a mortgage from. You can go with a lender that pre-approved you or start fresh with a different one. This is a paperwork heavy process, and there are several documents that you'll most likely need, starting with W-2 forms from the past 2 years, possibly more if you've changed employers, pay stubs from the last 30 to 60 days, proof of other sources of income, including documentation of any gift money, federal income tax returns from the past 2 years, recent bank statements, usually from the last couple of months, details on long-term debts like car or student loans, and of course, your ID and social security number. Once your mortgage application is complete, you'll go into underwriting. During this process, the lender makes a final decision on whether to give you the loan. Underwriting includes digging deep into your finances, so you may need to come up with even more documents. The lender will also look at the home you've chosen via an appraisal and may request a title search. Last steps before closing. So to start, you would get homeowners insurance. It might feel strange to take out an insurance policy on a home you don't actually own yet, but most lenders make securing homeowners insurance a condition of giving you a mortgage. You'll want enough coverage to fully replace the home, which might not be the same as your purchase price or the appraised value, and typically the policy should become effective on your closing date. You would then schedule a home inspection. A basic home inspection can raise issues you might face down the road and point out any necessary repairs. This inspection covers all aspects of the house from the foundation to the roof. If you have a particular concern like mold or water damage, you may want to get one of the more specialized types of home inspections in addition to a standard inspection. You choose the home inspector and pay for the home inspection. If it uncovers problems that weren't included in the seller's disclosures, you may be able to negotiate with the seller. You would then have the home appraised. The home appraisal is completely separate from the home inspection. While the home inspection is for your peace of mind, the appraisal is really for the lender, which doesn't want to lend you more money than the home is actually worth. An appraisal looks closely at the home you're buying and at comparable recently sold homes to determine the market value of the property. Your lender will choose the appraiser, but you'll pay for the appraisal. Even if you're buying a house with cash, you may want to consider hiring an appraiser yourself to be sure about your investment. Lastly, you would negotiate any repairs or credits with the seller. Though some items like prorating property taxes or HOA fees will already have been addressed in your offer letter, you may still have some items to negotiate before closing. Your ability to negotiate can hinge on what kind of market you're facing. In a strong seller's market, it can be difficult to get concessions since the seller can simply go to their next offer. But if it's an issue that will come up with any buyer, for example, a necessary repair that will get flagged by any home inspector, you may still have some leverage. So now we're on to closing and saving. You finally made it to the last step. Getting familiar with the standard closing documents ahead of time can make the closing a smooth process. Your lender must provide you with the closing disclosure at least 3 days before the actual closing. You can compare it with your loan estimate to see whether and how any closing costs have changed. This will let you know how much total cash you'll need to close. On or close to closing day, you'll do a final walkthrough with your real estate agent to make sure to check that everything's as agreed upon. For example, that all the appliances that are supposed to be included in the sale are still there. After this, you're now getting the keys to your new home. Once you moved in, it's important to maintain your home and keep on saving. If your home is going to eventually be worth more than you paid for it, it is important for you to take care of the property. Damage to the property can end up decreasing the value of the house and could result in you actually losing money. These insurance policies can provide you with the necessary money to make repairs should your home be subjected to a fire, flood, or any number of things that can cause damage. Having homeowners insurance is crucial. It helps ensure that if something happens to your home, you will not end up in a financial bind. It's a good idea to speak with an insurance agent near you about insuring your new home. Now it's time to enjoy your home and continue to save. So we care about your financial literacy. We Florida Financial is partnered with Green Path Financial Wellness, GreenPath provides free individualized counseling, guidance, information, and tools to help individuals meet their goals and improve their overall finance health. To access their free services, you can go to our website, which is wefloatafinancial.com, and scroll down to GreenPath and click the link. They also offer free webinars. They have a range of different topics, and they record those webinars so you can watch them on demand as well. It's a really great resource, and it's free. So this shows some of the topics that they've done webinars on, preparing your finances for back to school, things like that. So you can go to our website to access theirs for free. You can also reach them by phone at 877-337-3399. So how to join We? How much does it cost to join? There is no fee. You can simply open your savings account with a minimum of $5 deposit. This represents your share of credit union ownership. As long as your $5 stays on deposit, you're eligible to benefit from any credit union service, including applying for loans, mortgages, and more. You have to live or work in one of our 46 Florida counties, including Broward, Miami-Dade, and West Palm Beach. You can also be a family member of an existing member. So if you don't live in Florida, but you have a family member that does, and they're a member, then you can become one. You can apply to become a member online at wefloatafinancial.com or at any of our financial center locations. All of our locations are listed under our website under the locations tab. We connect. So, sorry about that. Skipped ahead. So we are on social media. We're on Facebook, Twitter, LinkedIn, YouTube, Instagram, and TikTok. All of our handles are WeFloatAFinancial, except Twitter is WeFL Financial. On TikTok and YouTube, we post financial literacy content. So if you want to check those out, along with our other platforms, we're always posting about events, products we're offering, specials, financial literacy tips, things like that. And then questions or feedback. If you want to call me or text me, my phone number is 954-871-7525. And my email address is hcampbell@wefloatafinancial.com. So do not hesitate if you have any questions, comments, feedback. And if you want a free $25 on us, you can sign up at wefloatafinancial.com and enter your promotional code community25, which is on the screen, when it asks how you heard about us, to get $25 on me. You can also do this if you go to any of the financial center locations. You can, when you apply to become a member, you can just let them know this promo code as well. So we've now come to the end of our Taking Pride in Homeownership webinar. I hope that you learned some new things about the process. It is a lengthy process, but if it's something that you feel ready to do, it's worth it. And, there's pros and cons to renting versus buying. And I hope this helped you narrow down your decision. Like I said, we offer great rates on our loans, so feel free to reach out if you have any questions regarding that, and keep an eye out for our future upcoming webinars. Thank you so much and have a wonderful day.